Hey everybody, my name is Zach, aka SPAC Zach here, and welcome to my YouTube channel. Now the purpose of my channel is to try and uncover, shed light, and present all the SPACs that are out there because there are so many, it's hard to keep up with. So that's my goal here, is to try and document and really present all these different plays, because I definitely think there's a couple home runs that we could get into. And I really just want to bring these to light to help friends and family. Now, please note that I am not a financial advisor. Please do your own due diligence before purchasing any of these stocks. This is for entertainment purposes only. And then if any of you guys are new investors or looking for a new broker, whatever it might be, something with extended trading hours, pre and post market, feel free to check out the link in my description to my Webull. They're offering 2 free stocks if you deposit $100, worth up to $1,850. So definitely check that out. Also, if you don't know, I'm a licensed health and life insurance agent as well. I have a CleverRx prescription card linked down in the description as well. So feel free to check that out if you're looking for savings on your prescription, whether you have insurance or not. Welcome back to my YouTube channel, ladies and gentlemen. SPAC Zach here. Today we'll be covering our next company. Today we're going to be covering ticker INAQ, that's INAQ Acquisition Corp. II, who will be looking to merge with Metromile. First and foremost, let's just check out and see what Metromile does exactly. So Metromile is a leading pay-per-mile car insurance company in the United States. They're recognized by Forrester as a top insurance carrier in user experience. It's creating a loyal community of drivers with personalized insurance that is customized to each driver to be more affordable. It's powered by machine learning and customer-centric design. Metromile is at the forefront of disrupting a more than $250 billion personal auto insurance industry that has gone unchanged for decades. Now, through Metromile Enterprise, our software as a service business group, we license our proprietary artificial intelligence claims platform to automate claims, reduce losses associated with fraud, and unlock the productivity of insurance carriers' employees so they can work on higher impact experiences. Okay, so let's take a brief overview of INAQ Acquisition Corp. So INAQ 2 sponsor, Cohen & Company, has deep insurance sector experience. They have over $4.3 billion investments across 208 insurance companies. They're pioneers in SPACs who embraced the SPAC structure as early as 2015 and innovated on a variety of features, making it a favorable alternative for many companies looking to become public. So the team comprises founders, operators, investors, and fintech. Now they have a track record of success. Now the sponsor team members have been part of the Card Connect, Intermax, Shift, and Paya success stories. So let's take a quick look at Metromile's leadership team. Their founder, Dave Friedberg, as well as executive chairman, previously worked at Google as well as the Climate Corporation. Then taking a look over at Dan Preston, the CEO. He was educated at Harvard University as well as Stanford and worked at Isle Bayer. So Metromile believes that auto insurance is unfair to most consumers. They listed a few reasons why. Now there's a linear relationship between miles driven and expected losses. 35% of drivers drive more than half the miles and cause more than half the losses. Drivers are assigned to a class and all are charged the same rate. Within a class, there's a wide range of miles driven, and then 65% of drivers overpay for auto insurance. If you take a look at that little graphic on the right there, you can see that 65% of the drivers subsidize the other 35%, because that 35% drives so much more than the other 65%. The 35% poses a far greater risk than the other 65% of drivers. So Metromile aims to offer what no one else can, in their opinion, and that is insurance you pay for only when you use it. So Metromile is a data science company focused on auto insurance, and they're the world's leading digital insurer with over 2.8 billion miles worth of data collected. Now, for quarter four of 2020, of last year, their premium run rate was about $111 million. Now, jump to 2024 for an estimate. They're estimating that to about tenfold to about $10 billion. And then taking a look over at their 2024 estimates for enterprise software revenue, they're looking at about $48 million in that revenue for enterprise software. So let's take a quick look at some investment highlights for Metromile. Metromile believes they're in a massive, inefficient market where incumbents are largely marketers with inequitable product offerings. They have a unique customer value proposition where 65% of the U.S. drivers save, average savings of 47%. Data science-driven economic advantages, which include unique data and data science powers, top-line growth and profitability. They have industry-leading unit economics with a profitable insurance operation today with expanding margin profile. They're scaling rapidly through proven channels, taking market share with unique acquisition models, and then significant insurance revenue upside in a large market and high profit margins self-funds growth for many years ahead. And then with significant enterprise software revenue upside, they offer best-in-class enterprise software solutions already deployed and scaling rapidly. So let's just take a look at the massively fragmented market Metromile is in. So the U.S. personal auto insurance market equates to about $250 billion a year. So if you take a look here, you can see the U.S. auto insurance market share between State Farm, Geico, Progressive, Allstate, USAA, just to name a few. And if you take a look over there, you can see that no U.S. carrier has more than 20% market share. And then over 110 carriers are out there with greater than $100 million in premiums per year. Now this graphic just goes to show the difference between Metromile as compared to the traditional auto insurer, and just points out a few key reasons why they think that they are better than the traditional insurance provider. They believe they're built for the individual. They offer dynamic vehicle use, high engagement, as well as high margin, which is key for actual return. So being that Metromile is the only data science company in the world focused on auto insurance, they believe they have better models that offer personalized per mile, behavioral pricing, customer lifetime value, predictive maintenance, parking ticket avoidance, which is huge when you're in a big city, claims approval automation, as well as fraud detection. And now if you'd like, take a look at this little graphic here showing why customers love Metromile. One of the main reasons probably being that consumers save on average of about 47%. So by offering better pricing, in-app features, as well as better claims experience, Metromile believes that they're going to be able to retain customers far longer. So you can take a look at the right at the average monthly retention per policy, and just below that you can see that the average life expectancy of a new policy is about 3.5 years. Now if you take a look over to the right there, the average life expectancy of a policy in place that's over a year already is just over 5.2 years. Okay, so just taking a quick look at Metromile's unique superior unit economics. You can see here at their unique capabilities. I'm not going to go over everything. There's just too much here to cover. You can feel free to pause the video and look over yourself. But I really think it's cool that they offer AI accident reconstruction. And then taking a look at their loyal customer benefits. Like I previously mentioned, they offer customers savings of about 47% and offer instant claims handling. Now looking over at the leading economics, they have a lower customer acquisition cost, higher referral rate, higher retention rate, lower loss ratio, and a lower expense ratio. Now the thing about Metromile is going to be for more of the safe, conservative driver. somebody that doesn't drive too many miles and doesn't have a high risk of getting into an accident. They brake how you should be braking, not too hard. They don't accelerate too hard, and then they obviously aren't speeding all the time. So what you do with Metromile is you plug a little device in your phone. It's going to track your movements. It's going to track your phone use while driving, your speed, your braking, your acceleration, your cornering, as well as even your location. So all of those factors are going to play a role in what your overall monthly premium is going to be. So if you're a conservative driver, live in a big city, don't drive too much, I think this is the perfect option for you. However, if you're somebody that likes to accelerate hard, if you race, whatever the case might be, I definitely do not suggest this for you. So Metromile's automated fraud discovery delivers over 10% improvement in contribution margin. So with traditional insurers, up to 17% of claims paid are actually fraudulent, and then up to $8 billion in excess payments are made annually, giving them about a 3% profit loss. So this graphic offers us a little bit of a comparison here between Metromile and another company I really like and invested in. That is Lemonade, who's actually currently trading for about $145 per share. I got in them originally around $55 just a couple months ago. So let's just take a quick look at the comparison here. So as we can see here, Metromile has an annualized premium of about $995. Now their loss ratio is lower than that of Lemonade's by about 15%. And then taking a look at the 1-year retention, you can see they're pretty identical. Metromile actually having a slightly better retention rate by just over 1%. And then if you take a look at the loan to value over customer acquisition cost, Metromile over doubles that of Lemonade, 3.1 times that compared to 1.1. So feel free to take a look at this little graphic here showing Metromile's multiple channels of growth. I'm not going to go too in depth in that, but do feel free to take a look and see how they do plan to expand and grow into the future. So I really like this graphic here. It basically just depicts where drivers will be saving the most money. You can see that 45 million drivers can save with Metromile today. And by 2022, they expect that to be about 143 million, representing $160 billion worth of potential premiums. So recent work that improves the growth engine of Metromile, back in 2019, quarter four, they had a new affiliate partner underwriter. In 2020, Q1, they created a new quote engine. Q2 of last year, they launched the Ride Along app. And then in Q3 of last year, they had 45 new affiliate channels that signed up. And then November, quarter four of 2020, they had auto OEM partnerships. So while COVID has proven the durability of Metromile's model, it actually has had a relatively neutral effect on their financial performance, which many companies cannot say the same. Many companies are definitely dealing with some hardships due to the coronavirus outbreak. So taking a look at some good here for Metromile, paying per mile saved their customers about 30% just on day one. Their loss ratio remained within target. And then Metromile is a strong fit for working from home because you're probably not going to be driving nearly as much back and forth from an office. So, if you're only driving half as much, why not pay half as much for your insurance as well? Now taking a look at the bad, the premium per customer declined 30% due to per mile billing. So obviously you're not working at the office, you're working from home. So you're obviously not going to be paying Metromile as much, which is good for you, bad for them, but that's why you go with Metromile, because it's for the customer. They're not trying to obviously skim you like a lot of these other insurance companies. And then their competitors' lower loss ratio led to increasing marketing budgets and higher digital CPAs. So let's just take a look at some quick financials and estimates for Metromile. As we can see here, looking at the insurance revenue, for 2022, they're estimating about $257.5 million in insurance revenue. Skip a year, head over to 2024, and they're expecting that to over triple to about $931 million. So very close to $1 billion in insurance revenue for 2024. Look down a little further, taking a look at the contribution profit for 2022. They're expecting that to be about $44.5 million. Now looking over at 2024, that's going to multiply about a little over 5 times to $255 million in contribution profits. Okay, so taking a look at the one-day chart, you can see that we're currently up on the day. Now it is just after standard trading session. It's about 5:45 on Friday, so by the time this video is released, the price could change a little bit due to the after-hours trading. However, I doubt it's going to be by much, if anything. So just looking at it, you can see it's still pretty volatile. However, we are pretty close to the 52-week high on this SPAC. 52-week high is about $18.65. Now, with this SPAC, I actually see this one only going up. You might see a slight pullback. However, especially after the merger, I see this one taking off. If you compare it to Lemonade, which I like to because they definitely seem like two disruptors in their own rightful sector in the insurance industry. I mean, Lemonade's at about $145 right now. So I think in the next year or two, we could see numbers, in the hundreds potentially. So definitely keep this one on your radar for that reason. Okay, and taking a look at the 3-month chart, you can see it's been fairly consistent, not a whole lot of volatility with this SPAC. It's gone up slightly. I mean, it started at about $9.75. That's what it IPO'd at. So it's close to doubled since then. Now, heading into the merger, I only expect this one to keep increasing because it has backers. Chamath Palihapitiya, if you're not familiar with Chamath, he is one of the original senior executives over at Facebook. He also is the head of Social Capital, which is a big investment firm that invests heavily in SPACs. They took Open Door public, Clover Health. They're about to take SoFi public, and they got a couple other SPACs in the works, iPod, IPOF as well. So definitely keep that in consideration. You also got Mark Cuban investing in this. So some really big names backing this company. They really like the disruption it has to offer, like the Lemonade. So going forward in terms of a price prediction, I could easily see this one 4 or 5xing in the next year or two. Definitely within 2 years for sure, but whether or not it's going to be a year, I mean, that's up for the market to decide. So, but with everything, please just do your own due diligence before purchasing any of these stocks. Thanks so much for tuning in today, ladies and gentlemen, for my episode covering Metromile. I hope you enjoyed today's episode. Now, if you did, please consider liking, subscribing, sharing the video, as well as ringing that bell. That way you never miss another episode. Now, if any of you guys missed any of my previous videos, if you click on the link, it'll take you right to my channel where you'll be able to access every single company that I've already covered.